Hello traders, welcome back to the channel. This is Genoa with Trading the Charts Pro, and guys, we're here to break down the overall sectors that makes up the S&P 500. There's 13 sectors in the market, guys, and there's two sectors that are hot setting up right here right now, which I think these sectors are gonna bounce nicely and carry us through to the end of the rest of September. So watch till the end. I'm gonna bring up those last two sectors. So let's take it from the top, looking at XLK, which is the tech sector, guys. XLK is still moving very nicely, guys. So no wonder S&P 500 is still trending very nicely, guys, because we have tech still moving in a very nice and strong uptrend. So there's nothing really to worry about as far as tech goes. Is it a time to buy tech right now? Well, no, I'm not optimistic in terms of buying tech right now. If I'm going to buy the tech sector, I'd like to see tech pull back down to this breakout level, which was old resistance, and then at that time, that would have been really a extremely nice level to pick up tech at. So I like tech. Let it continue to run. That will help to keep the S&P 500 moving up very nicely. All right, let's move on over to Xlv Healthcare Sector. Guys, this is trending just as well, pretty good, just like the overall market is trending. Market is above 10 EMA, is also above the 20 EMA. This is a trending sector. Is now a good time to buy Xlv? I would say no, because there is no reason, there is no opportunity that have presented itself for us to jump in and buy Xlv right now. All right, so let's move on down. Xlc Communication, again, guys, if we zoom in, what are we seeing? If we're anticipating to buy the communication sector, we have to catch it when it pulls back to the 50 EMA. All right, those are the ideal time to buy the Xlc sector. And the Xlc sector also holds a lot of similar stocks that are also in XLK, which is the tech sector. So as you can see, the Xlc is going to move very similar to the XLK. The only difference is that a few of the stocks that are in Xlc are not in XLK, and Xlc was created so that the amount of stock or the market capitalization in Xlc could cut down a little bit, and we create a new sector, and this is why we have Xlc. So the opportunity that I'm looking for on Xlc, I'd like to see it pull back at least to this last high right here. This is a good level, or it pulled back down to the 50 exponential moving average, just like it has over and over, and then that would be right at the ideal level that I'll be looking to buy some Xlc. All right, financials, guys. When we look at financials, just like the market, everything broke out, started to make new high, but up until I want to say mid-June, financials came up, made a high, pulled back, chopped around a little bit. This was when earnings started to come out for all the banks. The things was a little bit choppy for a second there. However, if we zoom in just a little bit more, guys, we start to see where it's almost like financial come up and make a double tap right here. So this is somewhat looking like it's ready to pull back down, at least in the short term, to the 50 exponential moving average. So am I excited about financials based on how the overall sector is trading? I would say no. I don't see an opportunity right here right now in terms of the financial sector. All right, let's keep it going. Real estate, guys. Real estate, this was one sector that was lagging. We look back at the 2020 highs. This was one of the sector that is the very last, in a sense, to break out and make a new high and continue to run higher. So real estate, the sector is still looking good, but do we see an opportunity where we would go in and try to buy some XLK or take advantage of the sector, trying to dig deeper and find stocks that are in the real estate sector that would be setting up nicely? No, based on what we're seeing in the overall sector price action or the price chart of the sector, I'm not excited to look into real estate to try to find a trade. That's what I mean. If you own a property, you pretty much are benefiting from, the way XLRE has been running very nicely, because real estate has been doing phenomenal. All right, so let's keep on going. XLU is the utility sector, and guys, look what is going on. This one is a lagger, but it looks like XLU is just coming up to the 2020 highs, and we have to see and watch what happened here. Is XLU utilities able to break out above this old high from 2020? Then this means that this sector will continue to move higher. Is there an opportunity to buy XLU right here, right now? Well, the short answer is no, because 2020 high would actually be resistance, so we'd pretty much say price is approaching to the resistance. If we wanted to buy XLU, how would we identify an area of entry? Well, we can snap using just these lows that we see, and just these small highs, and just understand what price action is doing in the short term, and we can see that XLU has been trending. What are the low risk levels where we can get in? These are the low risk levels. So XLU hitting the short term resistance, potentially 2020 highs. We look back for it to come back down to around 66 and then retest into the 70. That will give us around a 4-point move to the upside to possibly take a trade. All right, so XLU is still not one of the hot sectors that I'm looking at for September. Let's keep it going. Consumer discretionary looking good, making new all-time highs, but in the short term it looks like consumer discretionary has hit a double top right here. So I'll be watching this very closely to see, is this thing able to break out of this and continue moving higher? And though it break out, it doesn't mean that I'm just going to run over to consumer discretionary to try to find a trade. I'm looking for the sector that is showing a pattern that is very consistent, and also a pattern that I understand. And if I understand that pattern, then I will go and dig deeper into that sector to try to find a stock or 2, 3, 4 stocks that has a consistent pattern, just as the sector is showing. All right, so let's keep it going. Same setup here, somewhat. This thing is hitting a short-term double top, so we need to see this sector here break out, continue moving higher. Let's keep it going. Consumer home builders. All right, so XLB, this is home builders, materials. We are seeing the same kind of short-term resistance where things has come up and hit a short-term top, pull back. Can it continue to take out these highs and continue to trend higher? Right now it doesn't look like it. XLB kind of losing some momentum. We had a nice pullback here, roughly into the 200 SMA bounce, and yet price is not able to take out this last high from here. So in order for XLB to continue moving higher, we need to see price action take out this 88 level, and that will open the door for price action to continue moving higher. We're coming down to the wire, guys. We're getting close. All right, so guys, when we look at metals and minings, what are we seeing? So this is a pretty interesting one. If we zoom out a lot, we can see that way back around 2008, this sector still has not recovered to its practically all-time high. So these are, places in terms of metal, silver, gold, stuff like that. These are places that I want to keep an open eye on, because based on what I'm seeing in the chart right here, right now, metals and mining has the potential to come up and take out this 47.76 high. And if that happens, then we're looking for the metals and mining sector to start moving back up into the $76. That's roughly around $29-30 worth of move in the overall sector. So what that means is that we would start to dive deep into metals and minings and start looking for some stocks that are setting up just like the overall sector. Or if you don't want to do individual stocks, it is ideal that you just trade the entire sector. This sector costs around $47 per share. You pick up 500 shares of the sector and just let it ride. All right, so this one is looking pretty good. This is still not a hot one for September, so we will move on over to industrials. Industrials trending higher just as well, but in the short term, we have seen where this market also seemed like it has hit a short-term resistance or a short-term top and is just moving sideways. All right, so in order for this sector to continue moving higher, we do need to see take out its last high right here for price to continue projecting more to the upside. All right, so now we're down there, guys. XOP, oil and gas, guys. If we look at this chart, right, when we look at this chart, this is one thing about trading, that is super critical, guys. It's just really coming inside here and studying these charts and see the consistent pattern. And once you see the consistent pattern, it means that you can identify a low risk entry, which is a support level, and you can also identify a level where the risk becomes high. Typically, the level that the risk becomes high is at resistance. So you want to buy the low risk, which is support, and then look to sell the high risk, which is resistance. All right, so just by this quick zoom out, looking back from around 2020, we see that oil and gas, the sector was around $98, right before the market plunged, right? So double retracement on XOP, guys. So when we look at it, quick review, market came down, crash, bottom, it retraced. So from this move coming down here, this was a retracement with the sell-off. So the sell-off came down, nice retracement around 50%, 60%, then the market retraced again. So this move came up, market retraced down again. So if we're looking at it in wave theory, after the market crash zeroed out, this would be like a big wave 1 move, come back, like a wave 2 move, come up, wave 3, and here we are inside. Now the market is throwing what start to look like patterns, or I recognize these as patterns. All right, so now this is where I get excited, because when I zoom the chart in, I can clearly 100% see that this is a strong support level. So 71 to around $75 is a extremely strong support level for oil and gas. All right, so when we look at it, price came up, pulled down, support, bounce, nice run up to 100, right? Price topped out, double top, boom, boom. Now price sell off and came back into that support zone. If you didn't see it down here, we will get another opportunity to take a play at it. All right, so now price has bounced from the support and it came up, but right now what I'm seeing in XOP is what looks like a clear inverse head and shoulders pattern, guys. So in the short term, if this pattern holds through, which if it holds this $84-85 level, then we should be anticipating a breakout of this $85 level and pushing oil and gas back up into the $100 level. All right, so this is a legit trade that I really like right here, right now. As long as this level continues to hold, then I'm anticipating a move from $85 up to 100. All right, so that's really about $15. So 500 shares times 15, that's pretty good right there. So this is one sector that I feel like is pretty hot for September. And then the next one is going to be energy as well, which is XLE. Why? When we zoom out, it is the same concept, guys. We see this level was holding very strong from 2019 as support. Market breakdown, crash, retraced, came back down, retraced again, and now we're back into this level again. Market came up, pulled back. Now we're pretty much staring at energy, right? Energy pulled back down to the 200, and here we are setting up nice inverse head and shoulders. $48 coming up to around 55, so coming up to around 56. So pretty much this is like $12 move to the upside. So I like this also with the intention that price can make this move from this quick consolidation, which if we snap this coming straight across, this is a short-term horizontal level, and our risk would be if price starts to break down below the 200 SMA, then we would no longer be interested in this. If price comes up, break above 56, now we have to zoom in a little bit more. And what is our next level? The next level would pretty much be the 2018 highs. So if we get a breakout on energy above the 56 lows here, right, then we can pretty much look for energy to make a move back up into these levels right here. So I'm pretty excited about XOP and XLE. Why? Because I feel like the next rotation is pretty much going to be a rotation back into XOP and back into XLE to continue pushing the S&P 500 ahead. And next, if after all of that we're still looking to see can the Russell 2000 break out of this year-long consolidation or sideways channel and continue to move higher. So there's a couple interesting things coming up into this week, next couple weeks, the rest of September. So guys, if you did find some value in this video, hit that thumbs up. Thank you very much for watching, and I look forward to seeing you in my next video.